Dad, you finish that podcast I sent you?
I did.
What'd you think?
Forgot about it.
Forgot about what?
Forgot about buying anything.
Except?
Bitcoin. Apple's going to have Bitcoin.
And?
PayPal's going to have Bitcoin.
They have it.
They are going to have it. It's not questioned. They have to have it because how can they sell it to people if they don't have it themselves? They have to have it. Everybody's going to have it. Don't you get it?
What's the move?
I'm selling everything. Apple stock, Amazon, selling it all.
What's going on, guys? It's K-Dub here with another episode of CryptoZombie. Welcome back to the channel. Hope you're having an excellent day today. Bitcoin and cryptocurrencies, that was interesting. It just actually flipped to red, but as you can see, essentially it's relatively neutral after the big breakout. So the question basically on everybody's mind right now is, was that breakout legit? Does Bitcoin have enough strength to keep pushing to the upside, or was that actually a fake out and we do need to still retest some of the lower lows? In other words, was it legit or not? Well, that's what I want to talk about today. We will analyze some of the key levels that we have been looking for on this channel for quite some time. And I also want to talk about something that some people have been considering bullish, but now has flipped somewhat bearish in the minds of investors. And this is the fact that Goldman Sachs has come out and said that they are looking to reestablish their crypto trading desk. Now, the last time that they had mentioned interest in setting up a crypto trading desk, as you could see by the arrow, was actually at the total peak of the previous all-time high. And considering that they're having news of setting it up again, this has a lot of investors worried. Will it actually have the same implications as it did last time? And does that mean that we're at the top and they're going to open it and they're just going to short Bitcoin again? Well, I'm going to give my opinion on it this time because it is extremely different fundamentally than it was previously. And I also want to talk about some bullish fundamentals right now that could show that Bitcoin has a lot more room to grow. Also, I do want to talk about Ethereum super quick towards the end of this video. It does look like we are still in this falling wedge. We are at a bit of a do or die moment. We're either going to fall below this key level or break out. So Ethereum could get pretty crazy in the next 24 hours. We will talk about that. And finally, I want to end on a hot topic, which is NFTs. Lots of people buying these NFTs, trading them, throwing a lot of money into these collectibles. Is it really worth what they're paying for? Is it all just hype? Is everyone going to get burned, or is it absolute genius to be investing in these right now? So that's what we're going to talk about today. If that sounds good to you, you know what to do. If you are not subscribed, definitely consider it. We do this every single day. And without further ado, first, let's dive into the charts. As usual, having a look right here, we did have a, like I said, some people have actually said that this was an ugly monthly close because we did have, this giant wick right here. And we also had this giant wick right here. But, considering what we had in January, that was considered an ugly bullish candle. And hey, we actually closed that month at around $33,000. And although people were screaming saying Bitcoin is crashing, we still closed the month at 45,000. So we've literally, if you go from December, we have 28,000, January, we have 33,000, and last month we had 45,000. So regardless of a lot of selling pressure, once we have these crazy moves, we are still going up. And as I've been saying on this channel, the trend is your friend until the end. We have not had a trend reversal yet, right? But having a look right here, you can see we did fall out of the falling wedge. It does look like we're consolidating. If you zoom in here, you could draw, a bit of a triangle. Zooming in, it kind of might look like a head and shoulders pattern on the 1 hour, but essentially we need to just pull back and have a look. Now, why I said that we were looking for that breakout was because of the spend output profit ratio. It dipped below 1 for the first time, and they actually break it down right here. It tracks the variation between purchasing price and sale price. It's used to represent overall market profit and loss. So simply put, if you have a value that's greater than 1, it implies that cumulatively people are selling at a profit. Whereas if you have it below 1, then that essentially implies that people are selling for a loss. And you could see that as soon as we dipped below that, we did have the instant breakout, right? But having a look right here, we are currently, even though we did get above my blue box territory, number 1, that was bullish. Number 2, we are retesting the top of the of the blue box territory right here. So that's two bullish things. However, we are dancing on it right now, and we need to establish a nice weekly close above it, because if we don't and we lose this, we could end up still falling down and filling this box below. And I'm not trying to maintain a bearish outlook. I'm very bullish on Bitcoin, but short term things could get still a little bit crazy, right? Sometimes you celebrate just a little bit too early. And I just want to point something out. You know, everyone was freaking out about falling down to $42,000, whatever. But according to the stock to flow model, the price of Bitcoin right now, as we speak, should actually be hovering around $36,800. So we are substantially higher than where we should actually even be on the stock to flow model right now. We're, over $10,000 higher, depending on what time you're watching this video. So, you could see they actually talk about the accuracy of the stock to flow model to date suggests that the market is recognizing the value of Bitcoin based on its scarcity and growing demand. Moreover, it highlights Bitcoin's value proposition against the depreciating US dollar and the programmed reduction of the flow, the Bitcoin halving. And we will talk about the dollar in a minute, a little bit later, because it could be looking a lot worse for that, which could be good for Bitcoin. In fact, in mid-2020, Plan B actually spoke about his stock to flow model, which was getting a lot of criticism, but I don't hear the critics anymore, right? He says, people ask if I still believe in my model. To be clear, I have no doubt whatsoever that Bitcoin stock to flow is correct, and Bitcoin will top between $100K to $288,000 before December of this year. In fact, he says he has new data that confirms the supply shortage is real. 2021 will be spectacular. And having a look right here, essentially at when we had this Bitcoin top right here, you could see that we actually had full-on confirmation. Once we got below this 50-day moving average, which is this yellow line, you can see right here, we bounced off it, and as soon as we got below it, that acted as a rejection, right? That acted as the resistance, and that was just full-on confirmation that we had a lot more downwards pressure to go, right? And Bitcoin has always been supported by this 200 weekly moving average, which is this pink line. You can see we had multiple bounces. We also had the bounce right here during the pandemic scare. And having a look where we are right now, guys, we are so far above all of these moving averages that there's just no way that this is actually the top. We would need minimally to have a pullback, touch the 50-week moving average, I think I said 50-day, and then have that flip resistance. So, we are so off of these things that there is no possible way that anybody could be saying that this is the absolute top and it's time to have a pullback. Now, I understand that these are lagging indicators. Okay, fine. Take it with a grain of salt. But one thing that is extremely bullish is the fact that Goldman Sachs Group has restarted its cryptocurrency trading desk and will begin dealing Bitcoin futures and non-deliverable forwards for clients from next week. Now, they say that this reboot comes amid the growing interest by institutions in Bitcoin, which has soared more than 470% over the past year. So it should be at least taken as bullish news. But Peter Brandt actually pointed out, he said, us old-timers have learned that whenever Goldman Sachs enters a market niche, it is time to guard your money. Most people assumed, and he says that a lot of people were saying that this means it's the top, but he says most people assume that my implication is that Bitcoin has topped, but this tweet was intended to point out that Goldman's involvement if in anything or all markets mean that the firm has figured out a new angle to take skin from their clients. So sounds like Peter Brandt is a bit of a Goldman Sachs hater. Now, let's just clarify something. When they actually said that they were going to open their desk back here, the desk never actually opened. And also, let's talk about the day. So it was December 21st of 2017. This was when the Bloomberg piece stated that they would set up their cryptocurrency trading desk. Now it says that Goldman Sachs apparently ditched those plans to launch the trading desk because the crypto started falling and interest actually, the interest fell. Right? So was that actually what caused the top of the markets? Well, if you've been following this channel, you'll know that, first of all, that was in response to the fact that the market had started falling and they didn't want to open because of that. But if we really look at what actually happened on that day, and this is from December 1st of 2017, the CME futures had the go to launch the Bitcoin futures, right? And you can see right here, the date was December 18th. And if we have a look right here, let me zoom out a bit. and have a look, I already marked it right here, and we go over to the absolute top, you could see that the market topped out on December 17th, and literally literally the next day is when they launched the futures, and that is when they had, yeah, I mean, pretty much multi-year bear market, right? I mean, that was when Bitcoin's price just fell and fell and fell. So really, it was the CME futures that was responsible for this, right? All these guys that didn't have an opportunity to buy spot Bitcoin. Bitcoin's price had gone from $1,000 to $20,000. Finally, the institutions had an opportunity to get in. Wall Street had an opportunity to get in. And what did they do? They shorted, right? So it is very different this time. And to say that we're going to have the same results that we did, first of all, they didn't even launch. And second of all, the reason that they're doing it is because of the insane demand to get access to crypto. And plus, coupled with the fact that we've seen guys like Kevin O'Leary coming out, Mark Cuban, the two sharks, we've had Tesla, MicroStrategy. Probably only a matter of time till we hear Amazon and Apple are putting it on their balance sheet. It is definitely a different beast this time, and I would not say that we're looking for these similar results, right? And as I showed you guys, I don't believe we're anywhere near the top. I mean, we've only really had two corrections so far. Essentially we had, this one right here and this one right here. And if I change this to the log and we actually go back to 2017, I mean, look, guys, you can see we had multiple corrections that corrected down. We had one here, 2, 3, 4, 5, 6, 7, and I think I missed one. There was an 8th one right here. Yeah, so, considering, looking right here, guys, we've only really had two big corrections. I guess you could count this little Bart Simpson dip we had down here, but we are nowhere near the top, in my personal opinion. Now, doesn't mean that there's not some FUD, right? Good old New York Attorney General has issued her starkest warning yet. This is Letitia James in a double alert published on March 1st. She warned retail traders that they face heightened risk and low protection, both in terms of regular crypto trading and being potentially subject to abusive and unsafe activity by bad actors, exposing a period of widespread economic anxiety and high unemployment. If you purchase a well-established virtual currency from a very reputable trading platform, the price could still crash. How is that different from anything else, though? How is that different from any other asset or stock? Like, yes, everything you purchase could crash. Like, that's your reason? She says trading in the current market exposes investors to risks such as wild price swings, okay, conflicts of interest among trading platform operators, and increased chances of market manipulation. Further, even legitimate investments in virtual assets are subject to speculative bubbles. GME, Doge. I mean, you can make connections between any of these. I mean, this goes for anything. I think this is a really just not a good argument, honestly, in my opinion. But what's interestingly enough is literally the same day we have this coming out as a warning from New York, but then we also have JP Morgan saying, after cryptocurrencies rank as the poorest hedge for major drawdowns in equities, the questionable diversification benefits, JP Morgan now says that investors should put about 1% of their portfolio into cryptocurrencies. This can help them to, quote, achieve any efficiency gain in the overall risk-adjusted returns of their portfolio. So I think this is like hilarious. Like on the same day, like we get like this ultimate warning about cryptocurrencies being like, speculative investments, be careful, you could lose everything. And then we also have JP Morgan saying that they highly recommend that you put in 1% minimally, right? So it's just kind of hilarious. Now, not just talking about the fact, and I don't want to keep repeating the same things we talk about on this channel. We talk about institutions getting in. We talk about the companies putting it on their balance sheet. It's funny because in one hand you have New York, actually coming down on it. And then you have the city of Miami and Florida, let's pay people with Bitcoin and put it on the treasury. So, come on, guys, get with it here. Now, some of the things that we also have to talk about is the 1.9 relief package. So some of the things that are notable: direct funding to state and local governments and $1,400 checks to Americans who make less than $75,000. If it's passed, it'll be the third major stimulus bill passed by the U.S. government since the start of the pandemic. The stimulus last year contained nearly $4 trillion getting pumped in to prop up various top financial institutions, and we can't deny the fact that Bitcoin did in fact benefit heavily from these checks. In fact, we saw deposits on Coinbase of the original $1,200 check, exactly $1,200 deposits. Like, people were literally just getting their checks and just putting it all into Bitcoin, which in hindsight was actually a really, really good idea. idea, yeah, I mean, considering the time that happened, Bitcoin is up like 350% or something since then. And they go on to say that also, speaking about the dollar, since March of last year, the US dollar has fallen 10.5% and 10.3% to the British pound and euro respectively. While the new stimulus bill is considered smaller, it will likely affect the dollar. And we do notice that the dollar and Bitcoin tend to have an inverse ratio, right? Usually when the DXY pumps, Bitcoin pulls back. Well, we know that stimulus is going to hurt the dollar. It already has. We've seen the proof. Why would it be any different this time? So this is fundamentally bullish for Bitcoin. Once again, not to harp on, the original Goldman Sachs thing, but the reason that this is different and it's not going to be something terrible is simply because in the first time, it was just trying to like catch on the speculative trend, whereas now you're actually seeing hardcore demand from these clients who actually want to gain exposure to Bitcoin and other cryptocurrencies, right? So that is that situation. Now, we also have London-based fund manager Ruffer. They made waves in the crypto market last year after they bought 550 million pounds, with the fund gaining exposure via the Ruffer illiquid multi-strategies fund. And now, actually, what's interesting is, according to this, as of last month, they made 750 million profits in Bitcoin as well. And yeah, they say it brings something significantly different to portfolios. So lots of people are looking to simply just get exposure. In fact, Kevin O'Leary, who we spoke about yesterday, who you cannot make this up, guys. He literally changed his profile to laser eyes. What? The guy that used to say like Bitcoin is rubbish, it's speculative, he would never get into it. Not only does he say that every operating company I'm an investor in is having their Dan S. Loeb moment regarding putting Bitcoin on their balance sheet. Changes in the regulatory environment have changed my mind about participating. I will also invest in sustainable miners to avoid blood coins. But yeah, man, he's got laser eyes. He's got laser eyes. Like, is this really happening? What is this topsy-turvy world? And I did retweet this one where he talks about putting 3% of his portfolio allocation into it. Now, he also said that he has some Ethereum. So having a look at Ethereum also seems to be gaining traction as well with the institutions. Whereas it was usually only just Bitcoin, we've actually seen, for example, Polkadot ETPs coming out. So really quick, super quick update on Ethereum. I don't have really much to say versus what I said yesterday. I still think that we're in a very critical level. It's quite simple. If we have a breakout of this wedge, then yeah, I would be looking to put in a potential long. And if we have a breakdown, we start to break down below the $1,536 level line, then I think we're going to end up going lower, and we're probably going to continue on this falling wedge, which is still technically a bullish pattern. We would be looking for the breakout, but we would need to get above that level to really confirm it. And also, I wanted to mention something earlier about Bitcoin. I probably should have said it at the beginning of the video, but Bitcoin has a lot of overhead resistance, as you can see right here. One of the most key levels that I have my eye on, I'm sorry, I just remembered to tell you guys right now, is this level where you can see we had this resistance. I still think Bitcoin needs to get back above this level, which currently is sitting at about almost $53,000. So I'd want to get back above this and then start riding it as well. And I suppose with Ethereum, you could say the same thing. I'd want to get sort of back above the 1823 level as well. So I really want to see both of those, Bitcoin and Ethereum, get back above those levels. But talking about Ethereum, talking about DeFi, we've seen the two sharks come out, Kevin O'Leary, Mark Cuban has been talking about DeFi absolutely shaking up the traditional space. So DAOmaker, and I've told you guys about DAOmaker, these guys are like totally breaking the paradigm, of investments, and they have successfully completed their incubation project, Yield Shield. This is an algorithmic DeFi yield farming platform that makes it possible for anyone to farm the highest yield available on the newest DeFi protocols. And these things are in high demand. You saw what Urine Finance was able to do, Wi-Fi, right? So these are the types of projects you want to be looking into as well. Other altcoins that I always keep my eyes on are Polkadot-based altcoins. Polkadot coins have gone crazy. They've been the hot trend. Virtually every Polkadot project, has done quite well. And I told you guys, I think it was a few weeks ago, that one of the things you need to keep your eyes on right now, which is something huge, is insurance, right? If you want to have decentralized finance, you also need to have the component of insurance. How many of these crazy, rug pulls or liquidity crisis, or even just, you've seen people just literally losing 90% in a day. So now you have Tidal Finance, Polkadot based, by the way. They are decentralized insurance. They did just do a $1.8 million raise, and they've actually been under development since last September. Now, keep in mind, they're not even out yet. This is why I tell you guys about projects before they're out. You could do your own research and have a look. I'm keeping my eyes on these types of things. Insurance, Polkadot, it's a no-brainer, right? Tidal will help users buy and sell insurance against decentralized finance protocols. The buying part is self-explanatory, but as for the sellers, they will have to provide liquidity for DeFi protocols they want to back and then get the title tokens in return. So, we've seen things like this before, right? We've seen Nexus Mutual, we've seen Cover Protocol. They do exist on Ethereum-based DeFi insurance protocols. However, Tidal says that they have a competitive edge, and that is that they are designed to increase capital efficiency at reduced risk. They combine different protocols in coverage pools to allow liquidity providers to stake their capital to provide coverage on multiple protocols. Risks are reduced by combining protocols with low correlation and by limiting the duration of each coverage cycle. They also plan to launch an insurance product for different proof of stake protocols, including ETH 2.0. So they're looking to get on Polkadot and Ethereum 2.0. These are things keep your eyes on. Like I said, keep your eyes on the trends, the hot trends right now. Do I have to tell you what the other one is? I think you can't go on any crypto website or articles that don't talk about NFTs. I mean, everybody's talking about NFTs. People that aren't even crypto YouTubers are talking about NFTs. Gary Vee has been shilling NFTs, right? And look at this. Grimes just made over $5.8 million with her crypto art. War Nymph Collection Volume 1. I guess these are them right here. This is some of the pictures. So, this is something that a lot of people have brought up. And this is a question you have to ask yourself. What gives these value? I mean, I could just take this right now and I could just drag this on my desktop, right? But people are paying millions of dollars for something that you could literally just copy paste, right? So what is it that actually gives the NFTs value? I actually saw a funny tweet from Mike in Space. He said, to this, no, it doesn't matter that you can just screenshot it because you're not actually buying the JPEG. You're buying a non-fungible token, and the JPEG is merely the visual representation of that token. Besides, you can take a picture of the Mona Lisa too. What's so special about atoms, right? So, okay, it's a joke, but at the end of the day, certain things make sense almost as NFTs. When you're talking about in-game items, right? You're playing in a virtual world and you have an NFT that represents a sword or like a weapon or ammo or a shield or something, and you could send that to a person, sure. Also NFTs in the sense of, ownership of items, titles for cars, ownership of houses, land. You could divide land, subdivide it, have multiple owners of properties and buildings, right? That kind of makes sense with NFTs. As far as the picture item thing goes, I don't really know. In fact, I was looking to get some NFT experts on the channel. Crypto Stash is one of them who's reached out to me. And also my buddy Elio Trades, who I haven't talked to in a while with Superfarm. Maybe we could have him come on the channel and sort of discuss, why NFTs are so popular. And, is there something, like, is it a bubble, essentially? Or should we be worried? Like, not to say that it's not, I do believe that NFTs are here to stay, but do you think that maybe it's a little hyped right now and the prices that are being paid for some of these NFTs might be a little outlandish, especially people looking to flip them. Are you really going to be able to flip them? Is this trend going to stay this hot for this long, or is it going to just settle down and then just become, a normal way of just representing, like, hey, like, I have this limited card, or, just let me know, guys. I don't know. I'm open for, I'm trying to play devil's advocate here. I have nothing against NFTs. I've been talking about NFTs for years. It's just, they're getting kind of out of control, right? But then again, here you go over here, you have one-shot leagues doing a free-to-play competitive fantasy football game. Winners will receive digital sports cards from Sorore, which can be traded on the blockchain, and they've had prices reaching up of over 100 ETH. So I don't know, everyone's hopping on the bandwagon. So what do you guys think about NFTs? Let me know. I'm genuinely curious. Please let me know. Are they here to stay? Are they total garbage? Which ones do you think are legit? Like NFTs that represent real world items, like I said, like a deed, right, to land, or a title to a car, or an in-game item. But like, it's getting kind of crazy with these like pictures that are selling for like millions. I don't know. Let me know what you guys think about that. But I do just want to end on a bit of good news, and that is that Rakuten has extended crypto services for users in Japan. So the virus is spreading. I got to stop using that analogy. It's really not a good analogy considering the past year. But that being said, guys, thank you so much for coming back to the channel. Once again, if you are curious about how to learn, how to trade, how to profit, you guys can check out my tutorials. They're down below. $200 in bonuses for anyone who signs up. I definitely recommend Bybit. If you're going to do Bitcoin or Ethereum, there's lots of altcoins over on Femex, so they'll be popping up here when I'm done. But yeah, that's it from me, guys. Check out the links below in the description. Also, a free Telegram group for anyone that's interested. So that is it for me today. Thank you so much for coming back to the channel. You guys rock. You're the reason that I do this every single day. My name is KDub. This is CryptoZombie. Until next time, stay crypto. And of course, peace out.